And joining us on the line, a heavily respected investor, we have Marc Faber joining us from Zurich. And Marc, I know it's really late for you, so we really appreciate your time. What do you think about this sell-off right now?
Well, I don't think that so far it's been a major sell-off. I think we doubled in markets from March 2009 until the high in May of this year. And now, say, on the S&P, we're down 10%. And the whole world is panicking. I'm telling you, the world is mad. The investors, they don't understand that markets are volatile and that they have to be prepared to see stocks dropping 30% annually and then rallying 20% annually and drops 30%. That's going to be the pattern. And whoever can't live with that, he shouldn't be buying anything at all.
Marc, it's John Dawson here. You're saying the world is mad and the market is panicking. Is there right to panic? Because clearly the US economies could be facing a double dip. Quantitative easing 3 is being talked about. Is there good case for panic?
Well, I mean, I think there is a case to be ultra bearish about everything, but then you have to think, if I'm really very negative about everything, what do I invest in? Government bonds in the US, the 10 years yielding 2.4% in a weak currency? Or do I invest in cash with negative real interest rates? Or do I invest in equities, real estate, precious metals, commodities, collectibles? And I have to say, yeah, equities, they're going to go lower, whereby as of today, the markets are extremely oversold, and I think they can rally. But the technical damage that has occurred between November of last year and just recently is enormous. And I don't think we will see new highs for the year. I think we've seen the highs for the year between February and May of this year.
Well, you know, we have a lot of panic on Wall Street. We have VIX, the VIX index, really soaring the most in 4 years, volume jumping as well. So you see a lot of people putting, you know, a lot of options on the table. Marc, if you think we're going to go lower, I guess I got to ask, how much lower?
Well, as I said, I think the market is extremely oversold as of today, and I think we can have a snapback rally, say 40, 50 points on the S&P, but no new highs. And I always said, starting February, that the correction is on the way, and that will go down to, say, 1100, 1150, something like this. But now maybe it's not going to happen that we go down to 1100, because I can already smell QE3. And the next few weeks, or next week, will be important to see whether Mr. Bernanke is really a true money printer or just an amateur money printer. If he's a true money printer, he's going to start printing soon. And then the markets will rally, but no new highs, as I said.
Marc Faber, thanks so much indeed for joining us again. That's clearly a very wise words there from a very respected analyst in the markets again.